portfolio in red, even the market is booming. Have you ever gone through such phases? And the solution for that is just only one option, that is diversified portfolio. And today we are gonna look at it. Hi, this is Nithan Nair. Welcome to Tradeplus. So first of all, what does diversification mean? It's simple. It's just like not keeping all your eggs under one basket, because if the basket falls, then all your eggs break. And that's a simple concept that we are using here in investing also. Instead of investing in one sector or one stock, we are diversifying into different assets. So what happens is that even though one sector goes down or one asset go down, the other one will be good enough to give you some decent return. And the ultimate goal of diversification is not to increase your return or to decrease your return. It is absolutely to minimize your risk. And that is what diversification really means. For example, equity crashed 39% in the year 2008 and 9. And if you had a gold maturing that year, and if you're highly depending upon that, it would have been a real disaster for you. And that is why you always say that a diversified portfolio is the only way that you can overcome such situation. If you had an investment plan which was having across equity, cash, gold, and debit, it would have given you a decent return. It is all because of the stellar performance that happened in gold, which was up 24%. So if you would have done that, it would have been a real disaster for you. And that's why you always says that if you're investing, make sure you invest in a diversified manner. Because if you would have invested yourself in equity, debt, cash, and bonds, it would have given you a decent return. It's all because of the stellar performance by the gold, which was up 24% in that year. And the situation completely reversed in the next year, where equities moved 94%. Balanced portfolio. As just the name suggests, it's a balance between aggression and conservative assets. A balanced portfolio just looks like 50% of equity, 35% of debt, and 15% of gold. And in case of equity, it's absolutely investing in large cap stocks because they are less volatile and defensive in nature. And balanced portfolio are only for the guys who want some constant return over the years by playing risk-free. Now let's move on to the 4 ways to make a diversified portfolio. Point number 1, spread the wealth. Equities can be absolutely wonderful, but don't invest all your money in one stock or in one sector. Make sure you create your own virtual mutual funds by investing in the companies that you have seen, you have heard, and you have using in your day-to-day life. And that's the only way that you can sustain within the market. And equities are not only the option where you can invest. You can also invest in commodities, exchange-traded funds, and so on. And make sure that you create a portfolio for yourself that is absolutely manageable. Point number 2, consider index or bond funds. You may want to consider adding index funds or fixed income funds to the mix. Investing in securities that track various indices makes a wonderful long-term diversification investment for your portfolio. By adding some fixed income solutions, you are further hedging your portfolio against market volatility and uncertainty. Point number 3 is keep building your portfolio. Add your investment on a regular basis. This approach is helpful to smooth out the peaks and valleys created by the market volatility. And this is supposed to be the best strategy that you can use, because this strategy helps you to cut down the investment plan by investing a regular amount on a regular time frame, and it helps you to average your return. The 4th and the final point, when to get out. Stay current to the investment plans. At the same time, make sure which companies that you have invested and go for a research about knowing what the company has done, what the company is going to do, and what are their future projects. By doing so, you really know when to average, when to buy, and when to sell. By doing so, you can take your money from there. At the same time, you can move on to your next investment plans. Getting to the final part, every investor should learn how to diversify their portfolio before they start investing. And that is the only way they can sustain within the market. And it's also fair enough to understand that diversified portfolio not only helps you to manage your risk within the portfolio, but it also helps you to give you some handsome return in the long run. And that is the only way that you can make good returns throughout consistently. It comes at its cost because it might affect your gain in a short run. As a highlight to it, it's always good enough to remind that a diversified investor is always a satisfied investor. Now you can easily diversify your portfolio with Tradeplus with 0% brokerage and 0% AMC. Now try using our Rocket app, which helps you to invest in equities, gold, ETF, mutual funds, IPOs, and etc. To download the app, check the link in the description below. Open a Demat account with Tradeplus for comprehensive investment experience. Thank you.